In this video, I'm going to show you how to build a directional grid to use as a mechanical trading system. So the basic nuts and bolts of this grid, in this case a long grid, is that we place repeating buy stop and buy limit orders at a set distance from each other around the current price. As price oscillates through these orders, we gain profit continuously even as we carry negative orders against us. We use no stops and instead use a set starting balance or float to control our risk. So step 1 in trading our grid would be to decide on the direction we want to trade. If we think price is going up generally, then we want to use a long or buy grid. If we think price is going down generally, then we want to use a short or sell grid. We will not be using any combination of buy and sell orders or hedging at all. We will trade in only one direction. So the easiest and, in my opinion, most effective way is just to use the eye test. So open your MetaTrader or trading platform, click on the 1 hour time frame, and just look. Price is clearly going up. There are lots of fundamental and technical reasons for this, but honestly, we don't care. We just want to use the momentum and capitalize on it. So to create our grid, we will be using a combination of buy stop and buy limit orders around the current price. We will use set entry and profit targets to allow price to both open and close our orders. And once they are closed, we will replace the closed orders with buy limits and allow price to return and complete the cycle once again. So step 2 would be to decide on the unit size of your grid. The unit size is defined by the distance in pips between entry orders. So if your unit size was 1, you would have entry orders every single pip. 117.04, 117.05, 117.06, 117.02, 117.01. If your unit size was 5, you would have entry orders every 5 pips. 117.05, 117.10, 117.15, 117.00, 116.95. If your unit size was 20, you would have entry orders every 20 pips. 117.20, 117.40, 117.00, 116.80, etc. So the yin and the yang of unit size is that the smaller your unit size, the more profit targets you should hit, just due to the fact that price has to retrace less to reopen closed orders. But the smaller your unit size, the more money you need to keep a healthy grid and not get stopped out by a random price swing. This is due to a rule of diminishing returns. Each level you add to the bottom of a grid costs more money than the previous. So here is the math that displays the diminishing returns for 3 different unit sizes. For 1 pip units, that's entry orders every single pip. To trade a 50 pip grid, you would need 127.50. To trade a 100 pip grid using the 1 pip unit size, you would need $505. For a 2 pip unit size, that's entry orders every 2 pips. To trade that 50 pip grid, you would need $65. And that same 100 pip grid, you would now only need $255. For a 5 pip grid, to trade 50 pips of grid space, you would need $27.50, 100 pips of grid space, $105, and 200 pip grid space, $410. So the balance we are trying for is risking the least amount of money versus having the highest amount of grid space, but still having our units as close together as possible to make profit from those repeating orders. So the final step in building our grid is to decide on the profit targets for each unit. I think you need at least 3 to 1 or better to make grid trading work. The reason is, when price moves down from the top of your grid, and it will, the more banked units you have from each cashed order allow you to extend the area of space where you're in profit in both balance and equity faster. Equity is the most important number. There are lots of grid systems, especially the hedged ones, that can allow you to obtain huge balances, but you're actually negative equity because you carry so many negative orders against you. So the balance for profit targets is, once again, we need to balance whether it is better to hit hard, meaning have higher risk reward, 5 to 1, 10 to 1, or better to hit smaller but potentially more often. We also need to think whether these smaller but potentially more often unit size orders actually exist. If you're using a 2 to 1 risk reward and price doesn't come back, then your order is meaningless and you're losing money by just not having a higher risk reward. So finally, I'm ready to build my grid. I've decided on 5 pip unit size and 25 pip profit targets for 5 to 1 risk reward. My initial float will be $410, and I will start trading 0.01 lots, and I know that that gives me a 200 pip grid. That means my initial risk is $410. If price were to spike 200 pips against me, I would get a margin call and the grid would be closed. We use 2 accounts to limit our risk, so we only keep what we need for that grid size in the account. So I will start with buy stops above, and I will give it a little bit of space, work my way around, and extend the grid 250 pips in each direction. So start with a buy limit, 116.80, target profit, 117.05. Now I'll do a buy stop. $117.20, target profit, 117.45. Buy limit, $116.85, 117.10 for take profit. Buy stop, 117.15, 117.40. Buy limit, take profit, so I will continue to build this out 250 pips in each direction, and that will be my channel. As price begins to hit my profit targets and I begin to create an area of space where I'm in profit in both balance and equity, I will begin to double my initial lot size every 20 pips to 0.02. As I hit more profit targets, I will close that in till eventually my entire grid will be 0.02. I will complete the same process, doubling it again to 0.04 every 20 pips, and so on and so on. My intention is to take advantage of this momentum and make as much money as fast as possible while still giving myself a large grid space to protect my initial float. So our grid is now built. We have orders in 200 pips in either direction. The approximate top of our grid would be 117.05 and the bottom would be around 115. That gives us lots of space to make profit, and as we begin to cash orders and bank units, we will create an area of space where we're in profit in both balance and equity. And that's that for now. We will let price do its thing.